Hello and welcome to Startup Street. I'm Arundhati Ramlin, and with me as always, Shruti Mishra and Ritu Singh. These are the top headlines from the startup space. Shares of Paytm hit lower circuit once again. Sources say investigative agencies, including the Enforcement Directorate, initiate preliminary inquiries. Investor wealth worth 1.2 lakh crore rupees has been wiped out in the last 27 months since listing.
RBI directs card networks like Visa and MasterCard to pause all business payments made via commercial cards. Sources tell CNBC-TV18 the move was prompted by transactions being done at business outlets or vendors that were not authorized to accept commercial card payments. Fintechs like Encash and Paymate that deal in such B2B payments could be impacted.
Nazara Tech's esports firm Nodwin Gaming is acquiring Istanbul-based esports and gaming firm Ninja Global FZCO. The acquisition will help Nodwin enhance its existing capabilities to offer solutions to publishers and brands in the Middle East and the Turkey region.
Move, a mobility fintech, has secured $10 million in new debt funding from Stride Ventures. Capital will be utilized to scale the firm's Indian fleet to over 5,000 and expand into new markets including Delhi, Pune and Kolkata.
Social media platform Xploger has raised $4.5 million in a Series A funding round led by Apple at a pre-money valuation of about $40 million. The homegrown platform will use the fresh capital for future growth.
EdTech company ClassPlus has announced ESOP buyback for more than 150 employees. This is the second buyback announcement made by the company in the last 3 years.
Instacart plans to cut 250 jobs, or 7% of its workforce, to focus on promising initiatives. This comes as the firm reported its first quarter gross transaction value and core profit above estimates due to an uptick in grocery orders.
TikTok said it will ramp up its fight against fake news and convert influence operations in the run-up to European Parliament elections in June with a local language app in all 27 countries.
All right, so those were the headlines that we're tracking for you today on Startup Street. But our top story today, Paytm's parent company, that is 197 Communications Limited, hit the lower circuit again in trade today. The stock has more than halved since RBI's directives were imposed on it on the 31st of January. Now, meanwhile, sources have told CNBC-TV18 that investigative agencies, including the Enforcement Directorate, has initiated a preliminary inquiry into the matter. Timsy Jaipuriya has picked up this story and joins in with the latest. Timsy, what's the inquiry about?
Well, that's right. What sources are indicating to us is the fact that investigative agencies, including ED, have initiated preliminary inquiry against Paytm Payments Bank. When we reached out to the Paytm Payments Bank, the Paytm spokesperson has told CNBC-TV18, and I quote, "In reference to inquiries and investigations by the Enforcement Directorate and other regulatory authorities, we would like to refer you to our clarification issued on 5th of February on matters pertaining to 197 Communications Limited and its associate Paytm Payments Bank Limited. We may be asked to furnish information and explanations by different regulatory and law enforcement authorities, including ED, and we have always complied with the requirements dutifully by furnishing the requisite information and explanations," end of quote. Just to give a background and remind our viewers that the Reserve Bank of India on 31st January had prohibited Paytm Payments Bank from accepting deposits and top-ups in customer accounts, prepaid instruments, wallets and FASTags effective from February 29, 2024. So we'll have to wait and watch for as to what happens after these preliminary inquiries are done, whether Enforcement Directorate actually goes ahead and registers a case under either FEMA or PMLA. And yes, what is the view that the Reserve Bank takes on February 29th? Something that we'll have to wait and watch for. Back to you.
Thank you, Timsy, for those details. Appreciate you joining us. Moving on, Amazon Web Services recently announced the AWS Space Accelerator India, a technical business and mentorship opportunity designed to foster startups focused on space technology. Now, the program aims to accelerate their development with support from T-Hub and Minfy. To tell us more about the program, joining me now is Clint Crozier, the Director of Aerospace and Satellite at AWS. Clint, welcome to Startup Street. And this is AWS's first accelerator program in India, and it is focused on startups in the space sector. Like I just mentioned, it follows the MOU signed with ISRO and InSpace in September last year. So tell us what's on offer. How does the program empower space tech startups?
Yes, as you highlighted, we built this program off the success of the MOU we signed with ISRO just a few months ago. And the goal was really to partner together to help grow the space economy in India, really to help unlock new innovation in the Indian space sector. So this is a 14-week program, and it empowers those space startups by giving them a platform to learn how to leverage the cloud to innovate across their missions. And so it'll provide technical and business mentorship for companies to grow and scale, frankly, in a way that they really couldn't do alone. As you said, this is our first country accelerator. We've run global accelerators before, but the reason we chose to do one focused specifically on India is because we see such vibrant growth opportunity in the Indian space market. There are some 400 private space companies in India. India has the third largest space startup ecosystem in the world. In fact, we've seen startups in India grow from 1 in 2014 to 189 in 2023, and that's extraordinary growth. As we look at two of the fastest growing space segments in the world, geospatial analytics and satellite communications, independent studies tell us India has the highest projected growth rates in the world over the next 3 to 5 years. So the partnership with ISRO is strong. The space market fundamentals in India are strong. The startup spirit in India is strong, and this is a really exciting market for both AWS and for India.
All right. The program is open to both early stage and mature startups, Clint, that are based in India, and interested startups can, of course, register by March 17th. First, take us through the selection process. What are the criteria and how many startups will get selected?
So we've got a team of experts, and they're going to hear pitches from every one of the companies that apply. And we've asked the companies who apply to address a specific challenge in the space industry that their company wants to help solve. And so we will select up to 20 companies to bring into the accelerator. And really, we're going to be looking across 3 key criteria. The first one is the innovative nature of the problem the company wants to solve. In other words, we want innovation. The second criteria is the value that the solution brings to the global space industry. We want to scale globally, India scaling globally. And then the third is we'll look at the team's specific capability to deliver on that specific solution and how they would apply AWS cloud technology to that solution. So those are the key criteria that we're looking at.
All right, Clint, let's talk about the sector now. Technologies such as generative AI, open transformative opportunities for the space tech sector. How do you plan to help startups innovate and develop sustainable solutions for the sector? If you could take us through the different use cases, and apart from funding, how do you and your partners nurture the selected startups?
As we look at Gen AI, we're thinking about a couple of really interesting use cases. One is to improve the design and reduce the time to design rockets and satellites and other complex space systems. Gen AI can play a real role there. We also think Gen AI has a role in improving satellite constellation management. In other words, the way we plan and operate satellites and spacecraft in orbit can be improved using generative AI. And then the third use case is the ability to enhance satellite imagery analysis. We're just at the very beginning of Gen AI, but we want to use these innovative companies that we bring into the accelerator to help us push the boundaries for what we can do in space and Gen AI. And by the way, in terms of nurturing the selected startups, so not only will each startup get a team of mentors while they're in the accelerator, and we're also happy to announce that the CEOs of Druya Space and Skyroot, 2 well-known and established Indian space companies, have also agreed to be part of the program. But once companies graduate, they get a permanent team of AWS mentors for life.
Okay. And like you mentioned earlier, Clint, AWS has previously conducted 3 editions of the AWS Space Accelerator program for startups to participate from around the world. So if you could quickly take us through some of your top bets.
We've taken 33 companies through graduation in the last 3 years from nearly 400 applicants worldwide. So just a few of the successes. Leo Labs, which is one of our alumni, was named one of the world's most innovative companies by an industry trade study. Many of our alumni companies have gone on to win big contracts with NASA, European Space Agency, UK Space Agency. Kawa Space, which is one of our accelerator alumni operating out of New Delhi and Bangalore, had a really interesting mission. They wanted to help solve maritime domain awareness, that is, using space and space-related data to protect against illegal smuggling, piracy, and supporting defense and security. So we see some really innovative ways companies have gone on to make a big difference coming out of the accelerators. And we're excited to see some more of that success.
All right, Clint, wish you the very best for this accelerator program. Many thanks for joining us on Startup Street. It is an absolute pleasure talking to you.
On that note, it is time for us to head into a short break. But coming up next, Attentive.ai secures $7 million. We put the co-founder and the CEO of the company on the hot seat to find out their key offerings and their growth story. Stay tuned. Welcome back. You're still with us on Startup Street. AI SaaS startup Attentive.ai has bagged $7 million in its Series A round, led by Vertex Ventures Southeast Asia and India. The round also saw participation from existing investors, Peak 15 Partners and InfoEdge Ventures. Now, the proceeds will be used to enhance product development, sales, marketing, and customer success initiatives, focusing on its recently launched products like Accelerate and Beam AI. To discuss the company's plans to bolster growth, we are joined by Shiva Dhawan, the co-founder and CEO of Attentive.ai. Shiva, thank you so much for taking your time out and being here on Startup Street. Now, as I just said, you're an AI-based sales automation platform, which is used by 500-odd companies globally, right? So give us a sense of what's on offer and how are you bringing efficiencies in for your clients?
So the industries that we are building a global AI-based SaaS product for is the landscaping and the construction industries. And both these industries are have traditional workflows. And what we are trying to do is be the technology partner of choice and provide AI to automate their workflows across the sales workflow as well as the end-to-end workflow. So we have 3 products: Automeasure, Accelerate, and Beam. And all 3 of them solve a very specific problem of manual workflows in the landscaping and construction industry, and we automate that using AI.
All right. And you've just got $7 million. So how do you plan to use the funds to bolster growth? What's on top of the agenda for you?
So product development and GTM, go-to-market. As a CEO, these are the 2 most important things in any business. You need to get your product right. The customers need to love the product. And we have 500 companies right now that absolutely love the product. And go-to-market is how you scale the business, grow the business. So we are expanding our sales team across North America as we scale Accelerate and Beam to more customers.
Right. So Accelerate and Beam AI were your most recent launches, right? So with this fundraise, are you going to be doubling down on this, or can we see newer launches coming up in the near future?
Our plan is to double down on these 2 products. These 2 products are serving, Accelerate is serving a $200 billion outdoor services industry, and Beam is serving a $3 trillion construction industry. So both these products have a very big addressable market to serve, and our goal is to just keep our heads down and execute and grow as much as possible on these products.
All right. And let's talk about the growth numbers then. Where are your revenues at currently, and where do you hope to close this year? What's profitability looking like?
Our goal is to get to $10 million of ARR this year. We believe we'll hit profitability next year. We are on track to hit that as long as we hit our growth goals. And given the recent funding, we are fairly confident that we'll get there.
So fairly confident of hitting profitability next year. And as you said, most of your clients are in the US, right? And that's where most of your revenue is also currently coming from. So what's the expansion plan? Any new geographies on the anvil? And how is India placed in this for you?
So our current focus is North America, US, and Canada. We have Australia and UK on the horizon. India, unfortunately, even though our entire team is in India and we are building a global product based out of India, but just in terms of the industries that we are targeting, landscaping and construction, even though construction is a big market in India, but we still, 2-3 years till we go to India as a market.
All right. So currently looking at those markets, Australia on the anvil for you. And you also have an impressive list of clientele that you work with in the US, like Brightview, Juniper, etc. So what's next? How do you plan to grow your presence even further?
So we have 500 customers right now. And our goal is to get to 1,000 customers by the end of the year and 3,000 customers by the end of next year. And there is a huge market only in North America alone for us to reach that number.
All right, Shiva, thank you so much for joining us on the show. We're completely out of time, but we wish you all the best on this growth journey that you're taking.
Thank you.
Okay, we're going to switch gears to MakeO, which is the parent company of dental tech startup Tootsie and Skinsy, which recently raised $16 million in a funding round that was led by 361 Asset and others. This capital, it says, will be used to support its plans to expand its geographic footprint and scale the experience centers. So joining me now to tell us more about all of this is orthodontist turned entrepreneur Dr. R.P. Mehta, the founder and CEO of MakeO. R.P., thanks very much for your time here on CNBC-TV18. It's a 5-year-old company now. Tell us about the growth that you've seen so far and how large your customer base has grown to.
Sure. Thank you for having me here. So at MakeO, we're essentially a clinical makeover platform. We're focused on providing smile and skincare solutions to users. In the smile category, we offer invisible aligners. That's the invisible alternative to braces to customers using a vertically integrated full stack platform. Across the skin segments, we offer a range of cosmetic derma treatments to consumers that can span from hair removal to acne, to anti-aging, as well as facials. On the growth side, over this journey, we would have started from, say, 4 customers a month. We are now delivering treatments to more than 40,000 customers spanning across the skin and the smile segments annually. We gross an annual revenue number of about 250 crores approximately. To give you a sense of the scale, we do about 1 lakh consultations both at home and at our experience centers via our doctors. Yeah, that's largely about the growth. We've grown to almost 7 core cities of India and ship our products to approximately 100 cities of India.
Well, thanks for summarizing that for us, RP. But, this round that you raised of $16 million, how are you going to deploy this? How many experience centers are you looking to add? And where else are you looking to expand your presence?
Sure. So we right now have about 25 experience centers across the top 6 cities of India that we operate in. We look to expanding this number to at least 40 centers across all of the cities of India that we operate in. The experience centers essentially offer customers access to treatments and consultations by expert doctors in-house. So it gives us a more robust offline presence as well. And geographically, we will also expand into the next leg of 30 cities in India where we will deepen our presence by tying up with more doctors, doing further trainings, setting up home scan services in the cities that are not present, and so on.
So what will that mean in terms of your growth going ahead? With you expanding your presence, what sort of jump are you expecting in revenues?
So we are, like I said, at about 230 crore annualized revenue run rate right now. We deliver close to 3,000 treatments to consumers annually. We intend to get this number to about a 500 crore annualized revenue run rate in the next 2.5 years. At the same time, we're also focused on efficiency and profitability. So in a 16 to 17 month time frame, we intend to also get to an EBITDA break even.
So, RP, speaking of profitability, you had a loss of about 180 odd crores in FY22. What's FY23 going to look like?
So FY23, the losses would have actually reduced by more than half from the FY22 numbers. So we spent the first 2 years really cracking product market fit and scaling up exponentially. The last 1.5 years for us was about consolidating business, getting in more efficiency in the business, and so on, which we did fairly successfully. And now with this capital that we have, the next 2 years for us looks to be all about sustainable and profitable growth from here on.
Well, we hope that's the case. A final question, RP. You outlined your various revenue streams, but are you looking to add to this? And what do you expect will be the fastest or the biggest growth drivers for you going ahead?
Sure. So in terms of growth drivers, I think geographical expansion into the tier 2, tier 3 cities of India is definitely going to be one of the larger growth drivers for us. Secondly, we are one of the very few aligner platforms in the country that has a US FDA certified lab, which has actually managed to get a patent in the invisible aligner appliances to be offered to teenage users. So we do foresee now being able to provide our smile correction products to a large segment of adults as well as teenage users moving ahead. Last year, we also acquired a company in the Middle East. And therefore, we will look to scaling up growth in the Middle Eastern region as well. We utilize or leverage that company to actually export our aligner products to KSA as well as UAE.
All right, Arpreet, thanks very much for joining us here and sharing your thoughts with us. Pleasure speaking with you. Thank you.
Thank you so much.
And with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching.